Now, this is built, as Sam correctly pointed out, is a carefully and surgically targeted approach to national security. And the idea is to limit the restrictions on investment in China into some very specific areas where there is a sense that the US national security could be at stake. But I think the bigger picture here, Martin, is that the message is quite clear that Washington wants to use the national security imperative as a way of trying to limit transfers of technology and investment related to technology in China, because there is not just a national security angle, but also, quite frankly, a commercial angle, because the new technologies, including the ones that are covered by this executive order, which are going to be the subject of fairly intense competition on the economic front between the US and China. So I think the broader message here is what has China, I think, a lot more concerned.
So, we're waiting, watching, listening for a reaction from China. It is unlikely to be positive. Let's try and move beyond that and talk about whether or not this is the beginning of some sort of coordinated action, not just the U.S., but its allies as well, because we know Britain, also the EU, are signaling that they have the intention to move along similar lines. And we can probably throw in Japan as well in this.
That's certainly a concern that the Chinese have, that this could be the leading edge of broader actions taken by many Western economies, which share very similar concerns, both on the national security front and also on the economic front, about China. When Janet Yellen was in Beijing, there were certainly discussions about these issues. And I know that the Chinese side pressed very hard to get this executive order taken off the table. But I think what was accomplished thanks to those discussions is that the executive order has been cast in a fairly narrow light. But having said that, I think it is going to have a pretty broad chilling effect on technology transfers and investments by US firms in China. As Sam pointed out, right now, the existing investments there are not covered by this executive order, but I think this is a sign probably of much more to come, and US businesses and financial institutions are probably going to respond to that by backing out of China.
Eswar, it's hard to predict how Beijing will react to this in terms of a retaliatory measure, but how do you think China is positioned right now to deal with some of this pressure if it is going to become a little bit more broader in terms of a more coordinated approach with regards to other countries? And does the economic slowdown that we're seeing threaten to undermine those ambitions, particularly because I just saw a piece that you wrote in the last 24 hours reacting to the deflation data saying Beijing has lost the private sector. That certainly isn't good news either.
That's a crucial point, Sam. I don't think the US Treasury or administration planned it this way, but this is spectacularly bad timing for China because, confidence is falling, growth is stalling. China seems to be sliding into a downward spiral with deflation, low growth, and lack of confidence, all feeding on each other. So this certainly does very little to inspire confidence that China is going to be able to pull back in terms of short-term growth. And this could also affect its long-term growth potential because China is very eager to move into high-tech, higher value-added industries. And at the moment, its domestic innovation program is not going that well. China still needs foreign technology. It needs foreign capital a lot less than it does the technology. But without foreign technology, I think it's going to be difficult for China to make that leap. So right now, this really hurts China.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.